November 2025 is here. Here's your market update, your mortgage and real estate news. The unsung hero for the housing market in 2025 has been the improvement in mortgage spreads. So, what this means here is as we've seen the 10-year treasury increase, we actually saw 30-year fixed increases actually larger and outpacing the norm. So, the norm is closer to 2%, but we've seen over the last couple of years that we've been closer to 3% difference. So, think of it basically the 10-year treasury is at 4. Generally, you're going to see interest rates around 6. That's kind of what we're seeing right now is closer to 2% spread. But now what we saw in 2023, though, because they didn't know how high rates were going to go, the spread actually gained quite a bit. So it was over 3% for a period of time there, as you see on the screen. So basically, if the 10-year treasury is at 4, we were seeing 7% rates, where now we've started seeing if the 10-year treasury is around 4, we've seen 6%. So this is really, really good news for interest rates and giving us a win. 28 out of every 1,000 mortgages right now, or homes, I should say, not mortgages, because some are free and clear, have changed hands. This is the lowest level in over 30 years. So basically what we're seeing low turnover rate in houses. So people aren't selling their houses and people are staying in their houses longer for a few different reasons here. We have seen a kind of 3 main things. Affordability is keeping people in. So if they can't move to something more affordable or something similar, then they're not going to move and they may stay in their lower rate or lower payment. Sellers are unwilling to give up their lower rate, and rightfully so, right? If you worked hard and you built up and you refinanced at the right time, it's hard to give up that lower rate. And then also economic uncertainty has been a big thing holding buyers back, and they're more cautious right now because of what's going on. And if they're worried about their job, they're probably not going to move. But realtors out there and sellers and also sellers and realtors, there's a lot of houses still selling. If you break this down on average, there's still 8 houses selling every minute. So if you're selling a house, don't worry. There's still buyers out there and there's still houses selling. If you're a realtor out there helping people, just know that there's a lot of people that we can go help and solve their problems and help them through this process. We're starting to see housing market move again, though. So after a prolonged slump, the existing home market finally is really showing signs of recovery. And we've had 3 main reasons why we've seen this recovery. Mortgage rates have been decreasing over the last couple of years, or from where they're at in the last couple of years, we've started seeing them come down. The lock-in effect, where people are locked in based on a low payment, low interest rate, we've seen that easing over that, and we'll show you some charts on it. Lower rates and more homes to choose from. So we're starting to see that there's more houses on the market, and we can actually help buyers figure out what they want to buy, and we have more houses available. So interest rates, we've seen interest rates drop from higher, almost low 7s, high 6s, all the way down to low 6s. And this has been a great trend in helping a lot of people unlock affordability. If we look at affordability here, we're seeing just earlier this year, we saw affordability on an average median home across the nation drop from about $2,800 down to $2,500, $2,860 to $2,530. This has been a real welcoming thing for buyers out there to be more affordable, and also sellers, because if sellers can't sell to buyers, they can't afford it. That creates a problem for both buyers and sellers. Something that's been helping on the buy side is that people have seen their wages continue to climb. We've seen wages go up since COVID time, and then that continue to increase wages overall. And we've seen the job market still pretty strong, and that's actually helping the buying market right now, even though rates are still elevated. This is definitely helping our market affordability. But as of September, 30-year fixed rates were in the low 6s, and it required 30% of the median home income. And so what we're seeing, though, is, to summarize this, basically houses are getting more affordable based on the income coming in. We saw a peak in 2023, and then it's continued to improve in affordability over the last 2 years. So houses were very unaffordable. 2022 is probably like one of the worst times. We saw interest rates started peaking up. We saw prices up. When you have prices and interest rates up, that is not a good mixture for affordability. But something that was challenging in 2022 is we had a lot of people that were in very low rates that were really didn't want to leave their house. They were in the lock-in effect. They were not going to leave because they had a low rate and low payment, and they got the house for a good price. So again, rightfully so, right? If you want to keep it, that's great. The biggest challenge though is that how are we going to move the inventory if we have everybody never moving and never leaving their house? So as you can see on this chart, we've seen a lot of people now with higher interest rates because they bought a house over the last couple of years, maybe refinance because they needed to cash out. So we have a lot more people above 4% than we had in the past. Back in 2021 and 2022, you can see that it bottomed out with sub 3.99 interest rates. So this is actually going to be good for inventory. So as we have this lock-in effect easing a little bit, what I'm seeing real time is this slide here definitely talks a lot about this. So currently we're helping a lot of people with life events, death, divorce, upsizing, downsizing, but not just upsizing just because it's, hey, I really need another bedroom. I literally can't fit in the house anymore because we have 2 more kids, 3 more kids. Or I have to move closer to my kids because they are living in a different state and it's a non-negotiable. I have to be by them. We're getting older. We got to be by a hospital. These are all the reasons why people are actually moving right now. In 2025, we also saw this in 2024 as well. These are real needs of what's going on in people's lives. And that's what we're helping people with right now, and we're seeing this real time. And then the share of mortgages that had over 6% hit a high. We have more households in a 6% rate. The benefit of buying right now is you have more leverage as a buyer, and that's going to help you improve your rate down the road, but also get a better deal on the home price. So this is a good thing, something to lean into and be aware of. More and more people have a 6% interest rate. But when those rates come down, they're going to be able to refinance and their price is locked in. And they can refinance that rate down, which is a really helpful affordability trick there. Inventories continue to grow. This is also going to help buyers and sellers because if you're a seller, you're a lot of times a buyer. So if you're going to move around or you need a house to where you're going to go to, well, you need some inventory. We've seen inventory bottom out in 2021 and then continue to grow up, increase all the way in 2025. We have had great inventory. Now, this is still much below where we're at in the years before. This is national averages. So, I mean, you see 2016, we were quite a bit higher. And then we kind of traded in that 17, 18, 19. We're trading kind of a tight range there. We're still below that, meaning that if you're going to be listing your house, you still have less houses to compete with in general, depending on your area, than you did back in 17, 18, 19. So this is still a good time. If you want to sell your house and not have too much competition, this still is a great time to do it. So we can, you can actually get your house sold for a good price. Purchase applications were down recently, but they remain 20% higher than a year ago. So we continue to see more and more people apply for mortgages and need housing and want housing, and looking to buy a house. So home sales are expected to rise. We've seen an increase in sales and an increase in inventory for these reasons. Projected home sales are continue to go up. So if you're in the market to sell or buy, just know there's opportunity to have more houses on the market here soon, and the actual transactions are going to happen quicker and more readily available. If you're a realtor, these are great things to show. People home sales have increased since 2025. So just know we're seeing more houses listed and available. I think this is great for buyers because we have more opportunity for buyers to buy. But as we see, we still have a restriction a little bit because of the interest rate. So it's not a full buyer's market because we don't have too much inventory. But if we have lower rates, we're going to have more buyers come to the market. Homes are now selling more, at a normal pace. So this is an advantage for buyers here because if we have more of an average time period to sell a house, that means you can negotiate, are not going to have multiple offers and this craziness like we saw in 2021. Made it really difficult on buyers. So this is very good news. More of a balanced market when we see on a national average where we have a little bit more normalized days on the market for selling. Interest rates, obviously, we already talked about that. Interest rates have continued to come down this year, which has been a good move. And as far as interest rates, it's important that we don't know where it's going to go exactly, but we've gotten some hints from the Fed, and they are not going to be lowering rates unless they see a softening job market. If we don't see a softening job market, that's going to be a reason for them to keep interest rates a little higher. So, job market's overall been pretty stable. Unemployment's been fairly consistent and not dropping down too low or too high. So if we have a strong job market, we're probably not going to see much lower interest rates unless we see some crazy move in inflation. But it's really going to be jobs focused. If job market's bad, we're going to probably see lower rates. If job market's good, we're going to probably see more of what we're seeing now. Monthly payments have dropped on average, so affordability was a problem in the last year or two. It's getting better and better. Pricing trends and by local markets, we've seen some markets change, positive or negative. Some are still appreciating, some are going down a little bit, depending on where you're at. May give you more opportunity to buy something. We're in Phoenix, Arizona. We've seen a little bit of a dip. This is the national year-over-year average, but the cool thing here is that it's still a fairly stable market overall because we jumped so high over the in 2020, 2021, 2022 that a little bit of a normalization is really healthy because if we kept seeing those big jumps, probably would be very bad for homeowners and the market if we saw those continuals. So this has been a good correction and nothing crazy. We don't see major crazy drop-offs. Price cuts remain elevated. We do see some price cuts, but keep in mind price cuts are all subjective because if you cut the price but you started high, then that's not necessarily in my mind a price cut, even though it is. We're seeing a lot with our buyers is our buyers are going in to make offers on some of these houses that are really low. And they think, oh man, I'm going to get a deal on this house because it's priced really low and all the other comps are $50,000 higher. Be careful on going into that trap because if you really like the house and you lowball an already low offer or list price, you might not get it because we see actually deals going above list price. If the listing agent's smart and the seller listens to the listing agent, which is key, then we're actually seeing people list a little bit below what they think they could sell it for and drive the price up. So if you see this here, what your competition is doing is pricing a little higher and coming down. And whatever you end at is the dollar amount you sell it for. So if you price a little lower and go up, you might end up being above what you would have listed it for and come down. So it's all about competition and getting people to look at your house. So use this information while you are out there listing your house or making offers as a buyer. Home price forecast, all across the board. We have some people that are saying 4% all the way down to negative 0.3%. Very area specific, but this kind of pause and great appreciation is giving buyers an opportunity to buy and actually think about what they want and give some thought based on the area, the location, the type of house, the neighborhood, gives them time to make the right decision, but be careful on falling for the trap like I talked about here. The good houses are being priced accurately and moving quickly, even though we're not seeing a big price increase in these. Some houses you can see a difference based on how you buy. So be ready to move quickly on it, but you do it gives you a little bit more time to think about what you're doing on making sure you make a solid decision on buying. Buying is important. These are projections here, so take it for what it's worth. It's from Fannie Mae. But the potential growth in household wealth over the next 5 years based solely on the increase in home equity when you purchase a home. If you purchase January 2025 and it went up, let's say, and the projected growth percentage based on housing price survey, expectation survey, you would grow $61,000 in net worth by 2020 or 2030, 5 years if you bought in January 2025. This is why I'm passionate about helping people get into housing. If you don't have a house, you're left behind, because if you continue to rent, rents have continued to either stay flat recently or go up, and they've gone up significantly over the last 20 years. Since I graduated college, you could have rented a house in Scottsdale, Arizona, for example, for $1,200 a month, um, maybe a little bit less. But now you can't even touch a house in this area for probably close to 3,800. That's devastating to somebody paying rent. But if you own the house, you have a fixed price, a payment, and your value is going up, and hopefully you can refinance to have your payment go down. So these are important. This is why it's important to own a house rather than rent. And if you're going to sell, make sure you get back in the market too as quickly as you can, so you don't let this thing run away while you're renting for the next 5 years. If you have any questions on this, please reach out. Please like, subscribe, and follow for more information. Again, thanks so much for watching. Kevin Brierton, your certified mortgage planning specialist and your no excuse lender. And we'll catch you on the next video.